a system that just ain't right. Gonna tear it down, gonna start a fight. Anarchy and numbers is my game. I'm the investor with no shame. Greed and corruption, that's the name of the game they play. It's all a shame. I won't play by their rules, I won't comply. Anarchy's the way. It's time to fly. I'll burn down the walls and break the chains. Shatter the illusion. Expose their games. The stock market's a stage. I'll steal.
And here we go. Happy Wednesday. Wow, we are halfway. It's hump day. This is the Anarchist Investor Live, coming at you every Monday through Friday at 12 Eastern, talking about contrarian investments, markets, the economy, how to protect and grow your money without it getting stolen from some dirty banksters or by some dirty banksters. Got a big show today. Got two huge topics to talk about. I'm going to pull down the banner, but just for your reference, remember, help me out with the algorithm. Help me out to spread the message of this channel. Give me a subscribe, a follow, a like, a share, anything that you can do, interaction-wise and basically to follow the channel would help out immensely, and I would be very thankful for that. So, what are we talking about today? On the hold screen, I have the U.S. dollar. Been a while since we've looked at the dollar really in depth, but there's a reason why we're looking at it today. The casino's up. There's some good juju in the casino. I wouldn't necessarily say that it's well-placed good juju, but there's some good juju in the casino today. Stock averages are up, and the dollar is up, and interest rates are down. So we're going to talk about that dynamic today, as well as some really treacherous stuff on the horizon as far as CBDCs are concerned, and the basically the technocratic surveillance state that we are probably already in, but we're careening further and further toward with every single day. So reason why we're looking at the dollar, and I'm going to pull this down really quickly. The dollar's up today, so there's a little bit of strength after a prolonged period of weakness here. We'll see whether or not it's able to maintain itself. But part of the reason why it is up, and if I can find the correct tab here, and this comes from our friend Lobo Tigre, who posted this over on X. Canada beats the US and EU to cutting rates first. Anyone up there feeling like celebrating? This is basically a news update from Trade Economics. Bank of Canada cut its key interest rate by 25 basis points, down from 5% to 4.75% in its June meeting, as expected, and they signaled more rate cuts will be delivered should inflation continue to slow as expected. The central bank noted it has stronger confidence that disinflation is converging towards the target of 2%. Well, one, what do we know about central banks? They're always late. And two, they always under or overshoot. And typically it's overshoot. And so what's going to happen this go around is Canada is the first to cut rates. This is a big deal. There have been some other market economies out there, not necessarily huge ones, but there have been some other larger economies that have cut rates previously. But Canada is one of the first, G20 countries, call it, to cut interest rates. And so now this comes on the heels or on the beginning part of the EU already signaling that they're itching to cut during June. So now you might have Canada cutting, you might have the EU cutting. If the United States doesn't cut interest rates, then you're going to continue to see dollar strength, which is going to, work in favor of disinflation, because a stronger dollar means that it goes a lot longer, and it goes further in terms of purchasing things. And it essentially means that not only do you have disinflation, you have a risk of deflation. Okay. And this is why this won't be allowed to last for a very long period of time, because the longer it takes, the more the stagger is between these other large economies cutting interest rates, or these other large central banks cutting interest rates, and the United States not cutting interest rates. You're going to see an appreciation in the dollar, which means disinflation turns into deflation very, very quickly. And by the way, there was another tweet earlier today out of someone shared comments by Austin Goolsbee, who used to be part of the Obama administration. Now he's a Fed governor for I don't know why, but he essentially said that the Fed was not going to falter on the side of deflation, that they were going to try and park inflation towards 2%, but they were not going to overshoot. Well, uh, they're in danger of overshooting to the downside if they don't act. And so this is very much a kind of keeping up with the Joneses kind of thing. As Canada cuts, as the EU cuts, the United States and the Federal Reserve will cut interest rates. This is not like this is a freaking certainty. Okay. Now, part of the reason why the casino is up today is because of this news. You're seeing equities rally because the punch bowl has been brought back to or at least we're anticipating the punch bowl is going to be brought back to this casino. We're also seeing interest rates drop, which means borrowing costs go down, which means credit generation can begin again, which means more borrowing, more spending, and supposedly more growth. But if we know anything from history, it's that central banks are late. Typically, the damage has been done, and we already know it's been done because we've had an inverted yield curve for ever, it seems like, and the inversion has been deep, which typically means lots of damage to the economy. And so just to show you, again, 10-year yield continues to get just racked, and this is from buying on the short end of the curve. And if you notice, yet again, the 2-year is sluggish compared to the 10-year. The 10-year is down about 0.85% to under 4.3% on the yield. The 2-year is not down as much. It is continuing to move lower, but it is not keeping up with the pace of the 10-year. And so big money is buying the 10-year more aggressively than they are the 2-year. And like I described yesterday, you also have a supply imbalance where tons of 2-year notes are being issued by the federal government via the U.S. Treasury. And that means that you have an oversupply of, U.S. Treasuries on the short end of the curve, which means that those prices can't really go up. They remain tamped down, which means the interest rates stay high on the short end of the curve as a result of that. That will have to flip at some point. And typically it will flip as soon as the Federal Reserve starts to cut rates. And so we're going to see literally a tsunami of buying on the short end of the curve, more than likely. And the question is going to become whether or not the Fed's actually going to get as much bang for its buck as it hopes out of rate cuts. I don't think it's going to, but we'll see what happens. But one thing's for sure, they're late, meaning the damage has been done. And in past recessions, most of the casino losses happen after the first rate cut. So something to keep an eye on moving forward here. That's kind of the dynamic that's playing out in the dollar right now. It's playing out in interest rates. It's playing out somewhat in the casino and the commodities and things like that. We'll go back through the rest of the market here in a minute, but I want to pull up the other story that I've been tracking today. And the other story that I've been tracking. Oh, wait, before I even get there, sorry, I like jumped the gun. I was like so anxious to get to the like black pill, the real black pill story that I'm looking at. Dude, the corporate press, specifically like the investment press, continues to gaslight the average person. Okay, this is absolutely ridiculous. Now, granted, this comes from last month, so this is a couple of weeks old, but this is a writer, Emily Peck, over at Axios. Okay, if you know anything about Axios, they're not exactly like an impartial news outlet. Okay, but this article is entitled "More Than Half of Americans Think the U.S. is in a Recession." It's not. So don't worry if things suck for you. It's just because you have a misconception about how shitty the economy is working for you. Let's see. More than half of Americans, and this is quoting from the article, more than half of Americans, 56%, mistakenly believe that the U.S. is currently in a recession and that Biden is responsible for worsening the economy, according to a stunning new poll conducted by Harris for The Guardian. Well, here's the deal. First of all, little bit of a political note. Uh, Presidents do not have as much control over the economy as everyone gives them credit for. It's always like this administration was good for the economy and this administration was bad for the economy. Look, every single administration is bad for the economy because they all muck around in it. They all cause big bubbles and booms and busts and things like that. They all suck. Okay. But they wouldn't be able to if it wasn't for the monetization of the debt by the Federal Reserve and the monetization of the debt. The appetite for the debt or the spending comes from the drunken sailors that are in Congress. So remember that. This is a team effort of shittiness, okay? But that being said, 56% of people polled thought that the United States was in a recession. But guess what? You're wrong. You're stupid. You don't know what you're talking about. You have no idea. You should just brighten up and change your perspective, and it'll make the economy seem better. Doesn't matter what a price of eggs or bread is. It's, things are actually good. You just have to think it's good. Pretty soon they're going to start pumping. What is it that they give to everyone in 1984? They're going to start pumping drugs into the water if they haven't already to make everyone feel better about the economy. That feels like it's a recession, but it really isn't. So you should feel better about it. Why it matters. The economy is actually in good shape and there's no recession. But misperceptions like this are a huge here it is, a huge political challenge for President Biden and an advantage for former President Trump as they vie for second terms. This is a shill piece of writing. It has absolutely nothing to do with the real world, the real economy. It has to do with manufactured ideas of, what numbers actually matter when it comes to looking at the economy and, the actual quality of life of Americans. It has absolutely nothing to do with that. It is a shill piece about essentially politics. And quite frankly, politics should have no hand in the economics. And part of the reason why we have such big discrepancies in terms of imbalances and inefficiencies in the market, purely political interventions within the economy. Just let things be, please. All right. So that being said, that's my political rant for the day. Stop getting gaslit. Do not allow people to be gaslighting you. If the economy sucks, let them know. No, you're full of crap. You're a champagne tyrant, and the economy sucks. And I know it does because I'm an actual human being and I'm living through it. All right, let's look at the other story that we've been looking at, that I've been looking at. This one has to do with the misery to come. happy days. This is a story out of Reuters. It is entitled Saudi Arabia joins BIS-led central bank digital currency trial. I will spare you all of the details here, but essentially the TLDR version is a number of countries are joining on to this central bank digital currency, but it's not for the individual countries. It's basically the back of the house clearing market between countries. Okay. So now imagine this: on any given day, the United States and Saudi Arabia. The United States imported, $1 billion worth of stuff from Saudi Arabia. Saudi Arabia imported $500 million. So there's like $500 million that needs to be sent to Saudi Arabia net on net. And so the clearing of that transaction, that net transaction, those balances between the two countries happens behind the scenes. And basically the Basel Bank is who's doing it in the back end. And so this BIS, which I forget, stands for like Basel International something. But so essentially it's the back end of the house. It's where all of the international trade clears overnight or every single month. And so this is now laying the groundwork for a globalized central bank digital currency. Now, interestingly enough, the technology that's making this possible isn't necessarily US technology. It is the name of the blockchain, or the CBDC system, is called the M Bridge. And they're going to be using the code that was basically the foundation for China's yuan, which is their digital yuan. Okay. If you remember, China has already rolled out central bank digital currencies to like over 200 million of their people. Okay. They've also rolled out social credit scores, universal identification. Let's see, their vaccine passports and health bills and their social credit score all gets attached to that. And then when you're a bad citizen, they don't allow you to get on the bus or go protest at your bank that's stealing your money. All kinds of fantastic, wonderful stuff coming out of China. And now we're going to include this on an international scale. Well, what does this mean? First of all, we know that the end game for CBDCs is to be attached to not just your social credit score, but as a major component of that would be your quote unquote, carbon credits, your environmental footprint as an individual. Well, guess what? This now takes that and scales it up to an international level, a national or an international level, meaning that countries could now be put on essentially carbon credit quotas between those countries on this CBDC platform. All right. And affect how their business operations on a day-to-day basis in the international marketplace transpire. And this is also what's super freaking scary. And that's why I entitled this this episode. Basically, we already know that personal sovereignty is under attack. Okay. CBDCs domestically within your own country is going to be a huge blow to individual sovereignty. This is a blow to national state sovereignty. Okay. This means that there's going to be a centralized system that can then penalize, the bad countries, right? Air quotes, the bad countries that don't go along with the system. They don't play ball. They have a political discrepancy, et cetera, et cetera, et cetera, et cetera. So essentially, this move towards, one world government, the easiest way to do it is via the money. If you control the money, you can essentially control the behavior and the decision making of the people that have to use that money, right? This is very alarming because not only is this removing personal sovereignty, it's removing, countries' sovereignty. And when that happens, I mean, we already see a number of other moves like that. Um, there was just a big rally over the weekend in Geneva, because in Geneva they're talking about this international treaty for pandemics, okay, and public health, and baked into those discussions are essentially like losses of state sovereignty from each one of the countries that are going to sign on to it, whether it be in small part or in large part. Well, guess what? Take that, marry it with this CBDC thing on the back end, and you're done, man. Like you shouldn't even have a legislature anymore. I mean, you could make the argument now that Congress and the presidency and whatnot and voting is all just a play, right? Like it's all just it's just a story that plays out in front of you to keep you pacified and keep you thinking that, things are potentially going to work out in your favor sometimes, right? And that you actually have a say in how things happen. I watched Fahrenheit 451 last week. And if you haven't watched or read the book in the past, there's like this dynamic where there's like a nightly show, and like the woman who's the main protagonist on the show, or the two people that are the main protagonists, they will like look at the camera and they're like, "What do you think, Karen?" Right? And there's literally millions of people named Karen. And so everyone who thinks they're Karen thinks they're in the show. And they give an answer, and then the people on the screen just proceed along the script regardless. Like, "Oh, that's good. Thank you, Karen, for your input." And then they just move along with the freaking plot. Well, guess what? That's exactly what we're moving towards now. We're moving towards a situation where, there will be symbolic votes. There will be rubber stamped things that have already happened behind the scenes. And it doesn't matter whether or not the politicians ideologically want to go along with it or not. They will have no autonomy. There will not be voting. There will not be input. There will just be an overall kind of umbrella set of, I'll call them rulers, because that's what they'll be. There will be an umbrella of oligarchs that then decide how commerce and basically how life plays out for most people on this planet. And it's going to be through a lot of these avenues, like this back end central bank digital currency clearinghouse. A reminder, I have a interview that is dropping probably Monday night. So if you're not subscribed to the YouTube or the Rumble channel, or following the podcast, I will be putting up the audio after the live premiere. But Monday night, I have a live premiere of an interview I just cut with Aaron Day. Aaron Day is raising the alarm bell. It is DEFCON 1 for him. He believes CBDCs are literally on our doorstep in terms of being fully implemented, and he is trying to arrange some kind of Manhattan project to fight back, to create an alternative that is away from centralized control, completely decentralized, so that you don't have this kind of overarching oligarchy that's determining what life looks like on a day-to-day basis, where you can actually retain some freedom and sovereignty. That interview drops Monday night. So if you're not currently subscribed, definitely get subscribed wherever you consume my content. YouTube, Rumble, your favorite podcatcher, on X. Follow me and put the announcements up. So that's coming out Monday night. All right. And let's go back to the markets. Let's look at the markets really quickly. I wish I had better news for you. I think I say that all the time. I wish I had better news. It's not a positive development. A lot of people will be like, oh, things are going to clear quicker and there's going to be lower fees and that kind of stuff. It's not going to positively affect you. It'll positively affect someone who has, $1 billion in transactions and they get back $1 million in fees. Like, it'll be great for them. Okay. It ain't going to be great for you. Like, the benefit in your life won't even be marginal. It'll be literally non-existent. Okay. And in fact, the vast majority of the downside is what you're having to face. And the upside isn't really going to help you very much. It's not going to decrease energy costs. It's not going to, make your life more efficient or anything like that. So, people got to get their shit together, and they got to understand that the play acting that's happening in front of them is just a diversion to keep them distracted from what's happening on the back end. And what's happening behind the curtain is some sinister shit. I'm just telling you. All right. Let's pull up the markets. Let's look through the markets really quickly. I think we're done talking about fixed income for the day, with the exception of it's risk on. So high yield bonds are up, and that's because of the anticipation of Fed rate cuts. Canada did it. Europe's going to do it. Obviously, Jerome Powell is going to follow suit. So we're happy. Economic data be damned. So that's the end of the fixed income discussion. Like I said, the casino's up, so the S&P is higher. Again, still happening on relatively low relative strength compared to the recent highs and the highs just before that. So we'll see how this continues to play out. The markets could continue to go up. This hopium, it can drive markets for a while, right? It could drive it throughout the entire summer. But at some point, reality has to set in. And so the bubble can grow and grow and grow and grow, but it will pop eventually, because you can't fudge numbers forever. Eventually, they get so bad that you literally can't fudge them anymore. And usually when that happens is when they kind of, pull the rug and drop the kitchen sink. And then all of a sudden they were like, oh, well, things we thought were like getting a little less good. Actually, they sucked the whole time. And so we're going to go back and revise all of these data. We saw it with the 2023 jobs numbers just today. They put through revisions where it was like, I think they said they overestimated job creation by like 700,000. That's like 3 to 4 months worth of job creation that they overestimated. So it's bullshit. What else can I say? Dollar's up. Volatility's down because yay, rate cuts. Crude oil's catching a little bit of a bounce here. But again, this could just be a reaction to the huge amount of selling that's happened recently. Again, we continue to watch crude, because if oil and energy continues to drop, despite the fact that there's been these supply constraints from OPEC and, oil producers in the U.S. not operating at full capacity, et cetera, that means there's a demand problem. And the demand problem means it's a weak economy. And that typically means that oil and gasoline and other energy commodities will head lower. So keep watching this. It's a little bit of a positive day today, but again, that's hopium having to do with rate cuts. Same thing. Actually, gasoline isn't really up all that much today. I did write an article 2 days ago about the contango that happened on Friday with gasoline. It is not a good sign. When energy markets, specifically gasoline and oil, go into contango, it means over the next couple of months to maybe even years, there's not a lot of hope that demand is going to be increasing. In fact, it's expected that it's going to be decreasing. So there's your sign of basically recession. Okay. So the 56% of you who think that we're in recession, that actually works in your favor. We're probably in recession, people. All right. What else do we have? Copper's catching a little bit of a bid today. Again, it pulled back after that huge run, and this is probably related to rate cut enthusiasm. Lumber is like, rate cuts. Who gives a shit? The economy sucks. No one's buying lumber. So it doesn't even matter for lumber. Lumber's telling you the truth right now, people. It's just continuing to get shellacked, taken out to the woodshed, so to speak. All right. Gold caught a little bit of a bid today, and silver caught a little bit of a bid today. They have been sold off for, like a week, 2 weeks. That sell-off has now created an opportunity for people to buy the dip. So I know a number of people are going out there to buy the dip. I want to call your attention to something here very important with gold. This blue line on the chart, and if you're listening on the podcast, you can't exactly see it, but there's essentially a diagonal blue line that moves from, I'll call it bottom left to not necessarily top right. It's a very flattish kind of line, but the reason why it's flat and only rising slowly is because it literally goes back to 1980. So if I zoom all the way out on the chart here, you'll see the tops of these peaks go all the way back to 1980. Okay, so this peak, well, that's actually 2011. Here's the peak back here in 1980. Okay, so the peaks in 1980, 2011, and now the peak here. Okay, they connect to form this blue line. And now when I zoom back in, you see that that's exactly what we're battling with right now. Why is that important? That's important because that is a 44-year trend line. All right. Gold is battling with a 44-year trend line. It put in new all-time highs. Yes, it did double top here. Okay. So usually you get at least some weakness afterward. However, watch how it behaves around this line. So this line right now, give or take, is at about $2,360 an ounce. Today, we're trading at $2,373 an ounce as of the time of this recording. This line is extremely important. We broke through it once, pulled back through it. Broke through it a second time, pulled back through it. Now we're like just gravitating higher through this line. If this line holds and gold continues to gravitate higher, the next move for gold is going to be a very strong updraft that will probably get us to 2,700. And the breakout will happen somewhere around $2,480 an ounce. Okay. So continue to watch this. And this will probably coincide with the hopium that's associated with rate cuts, et cetera, et cetera, et cetera. Okay. So this is a big level for gold right here. We'll see how it continues to act moving forward. Silver caught a little bit of a bid today after getting sold off a lot. Again, silver has sold off kind of more than gold has, which is why I called for gold to outperform, at least in the near term, over silver. But silver's caught a bid again. It is back above $30, just barely. We're at $30.10 an ounce. That is a huge reminder. Let me make myself big here on the screen. Huge reminder. I am giving away 5 ounces of silver. 3 to all subscribers, and 2 will be given away to random paid subscribers. Meaning if you're a paid subscriber, you get a shot at all 5 of these. Well, you get a shot at winning at least one of all 5 of these. If you're a free subscriber, you get a shot at winning one of 3 of them. And that's over at the Substack. So you get a newsletter every single day in your email. All it takes is signing up with your email. Like I said, it's completely free to get in on the first 3. And then if you want to be a paid subscriber, you get a shot at all 5 drawings that are going to happen on July 1st. So go to anarchistinvestor.substack.com to get involved on that drawing. Silver has caught a bid today. We're above $30. It is, this $30 level is going to be significant. Okay. Again, round dollar numbers typically don't matter all that much other than psychology. But in this particular instance, the psychology is important because, I don't really have any longer term trend lines that are kind of in play right here. And so, but what we do have is some history here at $30 dating back to 2020. And I could probably go even further back than that. Okay. So not only is it a psychological line, but it has been a significant line where there's been resistance in the past. We broke that resistance recently. Okay. Tried to drive to a new high and didn't, pulled back below it. And now we're trying to see whether or not all of the fast money that came into it, all of the fast money pushed it through the level. It's now pulled back. Now we get to find out the real silver enthusiasts, the real silver investors, are they going to buy this dip? I have anecdotal evidence, even myself, I'm buying the dip. I have anecdotal evidence that other people that stack silver, they're buying the dip. So I would assume that this trend continues higher into the future. And again, I've called for in the intermediate term $35 silver. If all hell breaks loose, you could be talking about $40 or $45 silver again, which would be basically a new all-time high. I always forget the all-time high. The all-time high was, oh no. Yeah, we hit almost $50. I don't know if we get that high. We'll have to see. Could happen. We'll see. Depends on what happens with uh the Fed, the rate cuts, and how laden with dollars the Bernanke issued helicopter is when the Fed finally, seems like they're coming to the rescue, so to speak. What else am I looking at in commodity land? Aluminum's weaker today. That's just a little bit of a trade back from this tariff associated trading higher that we've had over the recent past. Palladium's actually up today after getting just bashed for months and months on end. But again, this could just be hopium. I'm not sure that that's necessarily a long-term trend starting. We'll have to see how that plays out. Uranium's a little bit weak today, spot uranium price. Again, that interview that I just dropped with Lobo Tigre, we talk about uranium and the future outlook for uranium. He actually uses terminology that's like close to sure thing, right? Like the phrase sure thing, you typically don't hear very many people who have long lasting history in the market like Lobo has talk about sure things. Okay. Uranium seems to be one of those sure things. If you are not in on this investment, and again, I have to hold my nose and actually give some money to Wall Street in order to buy the URA ETF to get exposure to uranium. Okay. But that being said, dude has been spot on as far as uranium, as far as gold, and even when it became apparent that his calls on silver were way too conservative, he made sure to adjust that call as well. And so that interview is absolutely fantastic. If you didn't catch it, make sure to look it up on the podcast or on the YouTube or on the Rumble channel. But uranium, there's a future in uranium, folks. And if you're not in on it, it's going to be a huge missed opportunity here. All right. That's enough with the casino. Let's look at crypto really quickly in order to round things out. All right. Now I got to zoom in, and you guys have to deal with my 9 billion technical lines that I have drawn. Bitcoin looks like it's trying to break out here. The wedge pattern that it's been in, it didn't wait for the end of June. And so this could be the Canadian rate cut, then inducing European Union and the United States to cut rates. Bitcoin is breaking out. Ethereum is still kind of like holding its level here. I hold both Bitcoin and Ethereum. I've bought a little extra Ethereum here recently because I feel like Bitcoin's going to lead, but ultimately Ethereum's going to be the one that outgains Bitcoin because of the Ethereum ETF news that is pretty certain to drop here within the near future. So keep watching that. The overall crypto marketplace is, not up as much as Bitcoin. So Bitcoin is leading. A lot of the other coins are not necessarily up as much. Ethereum being one of them, which is part of the reason why the crypto market cap is not up as much as Bitcoin is. But you're seeing positive signs out of Bitcoin Cash. I think that's definitely another one. If you have some Bitcoin, I would diversify. So if you're buying more every single month, I wouldn't be a maxi here. I would diversify because this last run up is going to be strong. It's going to take some of the crypto with it with a lot bigger updraft than others. I would say Bitcoin Cash has two tailwinds. One is just the regular crypto tailwind that comes with Bitcoin. Remember, Bitcoin Cash is a hard fork from Bitcoin. So it's the same deal, 21 million Bitcoin Cash. That's all will be created. but it has a bigger block size. It's more efficient. It's faster. There's also a push because Bitcoin Cash is less centralized than Bitcoin is. And so a number of the people that are more in favor of the decentralized, more, ability to kind of anonymously or privately transact, they like Bitcoin Cash better. So it has that narrative working for it as well. So Bitcoin Cash is up today about 1.5%. That should be something that's in your portfolio, I would expect, if you want to have a little bit of diversification in there. It's not a whole lot of diversification because, like I said, it's just basically Bitcoin's, kind of brother or sister. But yeah, I would definitely hold a little bit of that. Solana and Avalanche are up today. I definitely think Solana and Avalanche are going to have some good days ahead too, here with this last final rip higher that's coming for crypto. And then Hive is just kind of marking time. I would expect Hive to have a nice little pop. Again, I'm converting my stable coin on the Hive blockchain into Hive crypto. And the other thing, I haven't really been paying attention to it, but Monero's been really strong. And this has come on the, the lead up and the heels of the case against Roger Ver and his arrest. A lot of it has to do with, hijacking Bitcoin, which is the book that Roger Ver wrote, talking about how Bitcoin has become centralized and essentially taken over by all of the people you wouldn't want crypto to be taken over by, as well as a number of other market dynamics that are happening out there. Monero has been really strong here. It might take a little bit of a break, but I would expect it to at least maintain these levels, if not drive higher. Pirate Chain is kind of like the redheaded stepchild of the privacy coins here, but I actually like Pirate Chain's encryption a lot more. Pirate Chain hasn't really participated. So it's also possible that if you missed out on the Monero move, you could pick up a little bit of Pirate Chain, some ARRR, and try and catch that move in sympathy after the Monero move. What else am I looking at? Gold and silver crypto are up because gold and silver are up. So that's a no-brainer there. And some of the exchange cryptos are up still. Binance crypto continues to be strong. And now CRO is moving in sympathy with that. So you're seeing a lot of risk on in the market. And again, this is, the cocaine is coming back, people. That's what everyone wants you to focus on. The cocaine's coming back. The Federal Reserve is going to, quote unquote, step out of the way, which is a load of crap. They're not going to step out of the way. They're going to try and prop up the markets by artificially stimulating it by dropping interest rates. So that's what we got today. And again, we know how this plays out. We know that we get a rally, and then we know that we get the worst losses after the first rate cut because economics is undefeated. You can buck the trend for a while, but eventually that just tsunami of truth ends up hitting you. And so this economy, you'll continue to see kind of like, these champagne Wall Streeters beating their chests about how great the stock market is. And yet at the same time, at least 50% of people are miserable and don't think that this economy is working for them. That will eventually play out. And unfortunately, I don't think it's going to play out to the benefit of the people who are miserable. I think it'll just be a reality check to the people that are living in fantasy land and fake money land and every other, gumdrop kind of fever dream that these people live in on Wall Street as they take baths in their bathtubs full of $100 bills. So with that, that's all I really have today. That's the end of the show. Thank you for making it to the end. Again, help me out with a subscribe or a like, follow, anything you do to help the algorithm. And yeah, with that, I will be back tomorrow, Thursday at 12 Eastern. A reminder that interview drops Monday night, so get subscribed. And also go back, and if you haven't, watch the interview with Lobo Tigre. It's absolutely fantastic. It's about an hour, so it's not like forever and ever and ever. Huge, like really good investment information in that video. So it's definitely something to check out. So with that, I will see you tomorrow at noon. And I appreciate every single one of you. Love you. Peace.
Stuck in a system that just ain't right. Gonna tear it down. Gonna start a fight. Anarchy and numbers is my game. I'm the investor with no shame. Greed and corruption, that's the name of the game they play. It's all a with my rebellious spirit. Watch me grow.